2 minutes here to the bell. Duke is saying, what's the stop for GME? I'm sorry, what is the stop? Ulta here, somebody brought up Kayvon. I don't know, man. I just would like to live in a world where there wasn't as much makeup. I'd like to live in that world. You know what I mean? Duke is saying 25. You're saying for a stop on GME? I mean, again, what is this word you speak of? I don't know what a stop is. Speaking of AI, just gonna cycle through some of these fucking names here again, just to see what they're doing. That's soon, man. Damn, what a nice short. What a nice short that was. You can take a look at the market here. I mean, I had the Nvidia puts overnight. You can see I got a 50 lot of these things, right? They print up to like $8 at the close, maybe 6.5. So I think it was up 50% on these. They're gonna open up even less here. They're gonna open up at $3. SQ,
real.
yes, we see the SQ. It's an interesting piece of news that comes out. Maybe you can rip some on the short side there. Let me worry about this. GME here for now. Damn. Yeah, a quick mover. SPY, nice fucking program up. Oof. Huge program up on SPY here. I would imagine the Nvidia. Yep. You can see the Nvidia is down here. Let's switch this up over
Stay like Bloomberg.
All it takes sometimes is a couple of days of gains on the S&P 500, no talk of imminent bank failure, and people will start to say crisis over. It's too soon. Equities right now, positive 0.6% on the S&P. On the Nasdaq, we're higher by a little more than 1 percentage point. Yesterday was tough. It was difficult. We had a down day. Let's see if we can bounce. There's your opening bounce. Switch to the board and get to the bond market. Yields look like this on a 10-year, higher by 3 or 4 basis points. Just sub 350 at 446.96, 346.96 on a US 10-year. On the FX market, or rather in the FX market, the euro against the dollar, euro-dollar 108.89, positive 1/3%. Stronger euro. We were through 109 a little bit earlier, looking for an ECB to keep on hiking and maybe for a Fed to pause. That's an interesting development in the last week. In the commodity market, crude positive 1/3%, $71 and about 14 cents. About 30 seconds into this session, your stock market looks a little something like this on the S&P, positive 0.75%. On the Nasdaq, up by more than 1%, higher by 1.24% at the moment. One sector to watch at the open, the banks. Coming off another volatile session of steep declines after Secretary Yellen pushed back against blanket deposit guarantees. First Republic rebounding despite racking up yet another credit downgrade, this time from Fitch, saying that its balance sheet is not sustainable. Katie Lyons, brutal for this bank over the last few weeks.
Yeah, brutal indeed, John. And I would just caution, as we look at an opening move that is to the upside by about 9% this morning, we haven't seen 2 back-to-back updates for this stock in about a month. Every day we see a gain, it is followed by a loss, and in recent history, usually a steep one the following day. So just keep that in mind as we take a look at the gains today. It is up about 9%, but that follows a 15% loss yesterday for PacWest, which is up by about 4.25%. It was down 17% after not only Treasury Secretary Yellen's comments, but also disclosing that it's seen about 20% of its deposits flowing out over the last several weeks, hence why they had to tap Atlas for $1.4 billion in cash. Just to zero in on First Republic, though, because as you mentioned, John, it got hit with yet another credit downgrade yesterday, the 4th in the span of a week. We can just see how this has been an incredibly volatile stock of peaks and valleys altogether over the last 2 weeks, down about 90%. And the future of this bank still remains very much in question. We know that the government is working with Wall Street, major Wall Street lenders, to orchestrate some kind of aid here further to the $30 billion in deposits they've already given. But this is a bank whose future still looks very much in flux. How much is that applicable to the rest of the regional banks, given that First Republic has seen as one of those that had more concentrated exposure is an open question, but that it hasn't really stopped the regional banks from trading largely in tandem, and what that means is trading largely below, underperforming the broader financial sector, as this risk is still seen out there, even if things seem calmer on the surface, John.
Katie, let's get the tech names on the board as well. Let's look at Snap and look at Meta. How important is this hearing going to be later on today?
Well, the hearing definitely will be important, but also if the ultimate outcome of this hearing or of legislation and Biden administration proposals that have been put forward results in a TikTok ban, that in theory will benefit the likes of Snap, Meta, and Alphabet. Of course, Xu is going to be testifying in about 30 minutes at 10 a.m. Eastern time. He is largely going to be faced with no allies in Congress who are very critical of TikTok and its owner ByteDance and the possibility that it poses a serious national security risk to the 150 million Americans that use it by collecting their data and sharing it with the Communist Party of China. So it's definitely going to be very contentious. And ultimately, if a ban is put into place, John, in theory, because TikTok charges less for ads, is able to snap up market share that way, and of course has a lot of eyeballs, it could benefit those other social media players. Our analysts here at Bloomberg Intelligence actually see YouTube as one of the biggest beneficiaries in terms of user market share. And of course, maybe other social platforms can snap up more ad dollars as well, John.
Katie, thanks for that. Let's get back to the banks. Truist cutting its price target on more than 24 bank stocks today, seeing potential upside for one name, writing the following: we are lowering our estimates to reflect lower net interest margins and higher credit costs. We continue to favour banks with conservative credit cultures, strong balance sheets, and see the most relative near-term upside in banks with dislocated valuations such as buy-rated Western Alliance. That stock is gaining, or rather KBW Bank Index right now is gaining by about 0.6%. That's the financials. Let's get to Tencent. Shares jumping the most since January thanks to fourth quarter revenue growth boosted by ad sales. Katie Greifeld has more. Hey, Katie.
Hey, John. Well, yeah, we've been talking a lot about TikTok this morning, but Tencent, to your point, is surging. Of course, this is China's leading social media company, and like you said, shares soaring after earnings, and on unconfirmed reports that Chinese Premier Li visited Tencent's offices on Thursday. Again, this is unconfirmed, but remember, Li is Xi Jinping's top deputy after taking over the premiership in March, and he visited automaker BYD earlier this week, so a lot of speculation that he also paid Tencent a visit as well. And today's gain adds to a rally that's really been building for months. Tencent, it's gained more than $200 billion of market value since October's lows, and in recent weeks, as you can see, it's pulled away from the Hang Seng Index and currently up about 8% right now, John.
Katie, thank you. DWS's David Bianco expecting the banking turmoil to continue, writing this: small banks will remain challenged with big profitability pressures as the largest banks will take share. We are overweight the biggest banks in the United States. David joins us right now. David, I want to ask you this. Do you think we can resolve these banking issues, the financial instability, without blanket deposit insurance in this country?
I don't think that blanket deposit insurance explicitly is a good idea or necessarily the cure for the challenges that banks are facing right now. Now, obviously, the commitment and the legislation already exists that under a national emergency that all deposits would be made safe by all means of government. But I think what we've got going on here is we're moving past the panic, but there are still pains that so many banks, particularly smaller banks, will face on their funding costs. Yes, the net interest margins will continue to come under pressure. And we are concerned about regional banks and those that tend to go to them to borrow. But we're overweight the biggest banks because despite the best intentions, it looks like they're going to gain share. I would simply suggest that the Fed, we're confident in their ability to put out fires and deal with individual banks that might be problematic at a time. But I think they need to address the funding costs that so many smaller banks are facing right now. And the tool for that for over 100 years is the discount rate. And I'd like to see some divergence between the Fed funds rate to fight inflation and the discount rate, perhaps going lower or not going up anymore to improve the positioning of bank funding costs.
What you're recognizing, David, though, is what a lot of people have seen. What they believe right now is that we have a two-tier banking system in America. You like the biggest banks in America for obvious reasons. Can you tell me what would make regionals investable for you?
Yeah, like I said, I think if the discount window, which is not only open wide, but if the discount rate were a bit of an advantaged rate to the member banks, and we strongly believe these are all assets that are good. This is an asset liability mismatch issue. So we think that not only should the Fed provide liquidity, but the Fed should also make sure that these banks aren't put into a greatly disadvantaged position to have to scramble for deposits and have to pay up, quickly to keep these deposits. If the discount rate were lower, it would give banks more time to reprice their deposits and to also reprice their loan books and securities books to get the higher yields. We're at the stage of this where it's not about liquidity, it's about cost of liquidity.
David, currently this Fed believes that this issue right now, to some extent, is a substitute for rate hikes. Do you agree with that?
I think the Fed basically said that. I think the Fed basically said that they expect and that they are willing to accept that challenges, especially at these smaller banks, will help them fight inflation. Well, this would be a concern to the banks and the communities that count on small banks. I think the Fed is saying they expect tighter credit conditions to be through smaller banks to be the transmission channel of their tightening policy. And if that's the case, and they're not going to do anything about it more broadly for smaller banks overall, then we have to expect that that smaller banks, their profitability will be challenged. And as I said, those that typically go to them for loans will be challenged as well.
Well, David, this is going to have obvious consequences for the economy. It's almost like don't believe your own eyes when you look at the bond market. The Fed's going to tell you rates are X, but we're going to know based on this that actually financial conditions are tighter because the supply of credit is going to get choked off by this situation. So when you think about the relationship between where rates are in the bond market, where Fed funds is, and how you think this economy is going to evolve, hasn't that just changed over the last couple of weeks?
Well, look, the Fed continues to say that the overnight rate is going to be 5% or higher, and that it will be a long hold at 5% or higher. And I think they've made it really clear that the bar for cuts is a high bar, which means either it's going to have to be an unmistakable recession breaking out, because I don't think they're going to be cutting, even modestly cutting, on just some kind of short period of evidence of disinflation. This has been the biggest inflation problem in 40 years. This is a stain on their records. I think what the bond market is saying is that I think the bond market actually hears the Fed on the high and long hold, but the bond market's probably saying, you know what, there's a 50% chance of that significant recession.
But David, I guess what I am saying is the Fed is saying 5, and they're not saying 550. But without this, they would be saying 550. But because of this, they're saying 5. But essentially, it's at 550. Does that make sense to you, David? What I'm trying to ask here is if they're at 5, you add on a layer of financial instability. This idea that the Fed's backed away and you can get long some of these assets because things are getting better, that's just not the way, I guess, the way I see it right now, David. Do you see it a different way?
No, I see it the way you're seeing it, that basically the Fed is accepting financial condition, particularly credit availability at small banks, as part of their inflation fighting arsenal. And that just means you need to be careful with how you invest. It's a challenge to smaller banks. It's a challenge to those that go to borrow from them. That's it.
Is it a challenge to tech when you see the NASDAQ ripping because people believe the Fed's backing away?
The equity market has been remarkably resilient, but with a tremendous rotation from financials, from many value cyclicals, it's the revenge of big cap tech. Now, look, I would simply say I find the overall equity market above fair value. I think full fair value immediately is about 3,800 on the S&P, and that'd be full fair value. Maybe 4,100 a year from now, which is 18 times earnings that still have downside risk.
David, you're awesome. It's great to catch up. David Bianco there of DWS on this equity market. We are about 11 minutes into this. Still positive 0.75% on the S&P and the NASDAQ, up a little more than 1%. Coming up, global central banks taking center stage.
If we need to raise rates higher, we will.
On the basis of the last projection, it's still clear that we might have more to do.
And that conversation up next with BNP's Sam Linton-Brown.
They're going to try to push this up to 97.50s. More than likely.
Alright, what about now? Can anybody hear me now? What about now? Testing, testing. Can you guys hear me? Alright, Joel, take yourself off or fucking, I don't know. We'll fucking figure something out. Alright, let's continue here. Apologies here for the issues. I went ahead, as you can see, I bought 200 of the Netflix. I need to get rid of, this market's going higher. So the question is what do you want, and then where are we going? We're going to claw back that whole program, right? So I got 200 of the Netflix long, and I don't think I want to sell this, at least yet, because I think we're going higher. I think I love the sell on the Netflix, right? So I sold the puts too on the Netflix. So as you can see here, I got a ton of those. Right, and then, you know what I'm going to do? I'm going to max out. I think the easiest way to scrape 40 Gs right now is to max out short some puts. Right, so let's see what we can get here. Right, so we're trading 39.74. 39.74. That's what we're trading right now. So if I sell the 30s, which is 40 handles out, I can get $3 for them, which ain't bad. The volatility, though, is still pretty high, man. Because even 50 handles out, damn. You know what? The question now is confidence, right? So let's go even further out of the money. Right, so 39.20s, and let's sell these for $1. Confidence. All right, so I'm gonna sell 100 of these. Well, let me sell 50%.
If we need to raise rates higher, we will. I think for now, though, we see the likelihood of credit tightening. We know that can have an effect on the macroeconomy, on demand, on labor market, on inflation, and we're going to be watching to see what that is.
Chair Powell committing to price stability amid concerns over a deepening banking crisis. This coming as the ECB says there's more work to do.
In terms of direction, if there is stabilization in the market, I think, again, on the basis of the last projection, it's still clear that we might have more to do.
The Bank of England making its own move today, raising rates by 25 basis points, saying the following: if there were to be evidence of more persistent pressures, then further tightening in monetary policy would be required. Lizzie Burden joins us now out of London, alongside Maria Tadeo in Brussels. Lizzie, 25, is that 25 and done, or 25 and more to come?
Well, markets think that this is the end, and I've been getting the drip of economist notes in my inbox, and many of them think this is the end, including our in-house economists at Bloomberg Economics. I think that line that you picked out from the minutes you can read two different ways. On the one hand, you could read it as them saying it really has to be persistent inflation evidence for them to go again. You could read the vote split as dovish, because even the big hawk, Catherine Mann, has scaled back her vote to 25 basis points. But on the other hand, you could interpret them as saying we've had this upside inflation surprise yesterday, we're keeping some powder dry, and you could interpret the vote split as hawkish because you didn't have John Cunliffe joining the dissenters as the economists had expected. I just would read the vote overall, the 25 basis points, as a compromise, because on the one hand they're showing that they're fighting inflation, on the other hand they're taking some of the advice of the of Silvana Tenreiro and Swati Dhingra that you need to be careful about the impact of previous hikes on the economy when it's already weak.
Maria, I have to say, listening to ECB officials, the hawks over there aren't in a compromising mood at all.
Absolutely not. And Jonathan, we've had this frenzy of communications from the European Central Bank. We've heard from the head of the ECB already 3 times. Remember, on the Thursday, on the Monday, yesterday in Frankfurt. And guess what? Tomorrow she'll be in Brussels. And they try to hammer down 2 messages, essentially. One is price stability and, of course, financial stability. There's no trade-off. They're going to continue to handle both. And that means, as you say, more hikes. Now, I think that takes us to a conversation on the forward guidance, which is at one point it was very explicit. Some of that has been muted, but you played that clip with the Belgian central banker yesterday. I spoke to Mr. Woods yesterday. He was very clear. You know, he is a hawk, and he was clear. And right now, we need to wait for the market to stabilize, but it is obvious that more may be to come. How much? That is the question. The other issue that I would just want to briefly point out and make you smile is European officials say they want to put this bank in turmoil to rest, close this chapter, and they say for once it's not our fault. It was the U.S. regulators and the Swiss regulators that created this mess.
Hey, Maria, thanks for that. I think a lot of people are blaming each other at the moment. Maria Tadeo and Lizzie Burdett over in London and Brussels, respectively. Thank you. Sam Linton-Brown of BNP Paribas laying out key differences between the Fed and the ECB, saying this: Powell did not talk about separation principle. Lagarde did. This implies greater sensitivity for the Fed to financial stability concerns than the ECB. Furthermore, one could argue the outlook for inflation remains more uncertain in Europe. Sam joined us now. So, Sam, great to have you with us. The euro through 109 a little bit early this morning, just short of that now. What kind of levels are you thinking about?
Good morning, John. We think it will break 110 on a sustained basis. We target this year 114 in Euro USD. The move from here we expect to be more of a grind than we do a sharp appreciation. A key point for that bullish view, as you were just pointing out, is potential differences between the Fed's sensitivity to financial stability compared to the ECB. We heard a lot at the last ECB meeting about the separation principle. We didn't hear that at all yesterday from Powell. What we heard is that credit conditions have tightened. And so this suggests, and I think the market's perception is, that the Fed will be more constrained with rate hikes because in the US, some of the financial instability we're seeing might be a function of more of a common problem related to mismanagement of duration risk, while in Europe, it's a little bit more idiosyncratic.
So, Sam, that's the rate differential story. What do you think that means for growth on either side of the Atlantic? How bad do you think this gets for the US versus how good do you think it's going to be for Europe?
Our expectation is that the US will enter recession. We think that will occur in Q3. We're not talking about a deep recession here. We think it's a shallow recession, about 1 percentage point of growth from peak to trough. We think it will last 3 quarters. In Europe, in contrast, we don't think there will be a recession. We think that risk has been avoided because of the energy situation having improved from very extreme levels before. And in Europe, you don't need a recession to get inflation back to target in our view. You just need growth beneath trend for a sustained period of time. If I bring it back to the market view and euro-dollar, I think that relative growth outlook is quite important because it means we've got a situation where front-end rate differentials, which are usually in the dollar's favor, are beginning to compress. We've got a situation where growth in Europe is set to outperform the US, which favors rotation into European risky assets. And we've got a situation where the current account in Europe has also normalized, which means that the structural flow dynamic is quite supportive for the pair to continue trending higher.
So when you push all of this through the FX market, everything you've just said makes sense. If it transpires, if it materializes, develops in the way that you explained. The tougher one for me at the moment, Sam, you had that big call on European banks, and I won't talk individual names with you because of the nature of your job. I understand the sensitivity of that. But just the banking universe in Europe, great trade when you made the call last summer. Is Sam, has the world changed?
The case is somewhat less compelling now than it was before, but we still think the sector is set to outperform. A key part of this is the valuation argument. That clearly is a well-told story, one in which valuations are at crisis levels. We don't think that's justified. The other element here is that you still have a tailwind from rates. Of course, given what's happened recently, there's some more two-way risk around that view, but we think nonetheless it's an attractive risk reward to think that it's a sector that is set to outperform.
Sam, just the last question from me. When that headline, the US is in recession, comes through, we'll be able to see it before that headline ultimately drops. But when that growth experience becomes worse, when that headline crosses, or a series of headlines, whatever it might be, sentiment's going to get hammered worldwide, you'd think. And Sam, surely that's going to drive a bid into the US dollar. What's the argument against that?
The argument against that is the reason the dollar usually rallies in risk-off is funding stress, that there's a funding squeeze, that people who need access to dollars aren't able to source those dollars at that time of peak stress. We saw that in 2008, we saw that during COVID, but the Fed have introduced a number of new facilities, and we've written quite a lot about that this week. Our head of macro strategy in the Americas, Calvin See, that the number of facilities the Fed have now introduced, and more recently making the frequency of FX swap operations daily, really preempts the potential for that funding stress to permeate into the market. So we don't expect the dollar to surge even when there are periods of financial stress.
Interesting. I've got to catch up with Calvin soon as well. Reminded me to do that. Sam, thank you. Sam Linton-Brown, BNP Paribas. Equities right now doing okay, up 0.9% on the S&P 500. Up next, your trading diary.
If I'm convinced SPY goes back to 400, I'd have no problems right now buying $1 million of pins. Fuck. But you know what? We just don't have to go down. As long as we hold up here, they'll still buy it. Carlo is talking about the Netflix. What are fresh highs on the Netflix? Yeah, man. Again, like, as long as we don't sell, they're going to keep buying this Netflix. What's the recent high? Can you guys tell me what that high is 4 days ago? I need the exact high. 4 days ago, 5 days ago. I think it hit 320, but give me the exact number. I'm going to sell another 50. I'm going to sell another 50. I got 100 left. 316.60. Are you sure? Can I get a confirmation? Because that means we blew through that number. Alright, so that is 360. Alright. So then selling up here is not a bad fucking call, guys. Selling up here is not a bad call. So this is what I'm going to do, guys. I'm going to sell another chunk and then leave the rest for the runner, right? We'll leave the rest for the runner. What did we make on that? We made almost 15 on that. That ain't bad. Alright, check the GME. I might sell another 5,000 shares. But now, I gotta figure this pins out, man. I gotta figure this fucking pins out. Because if it's a trap, it's a trap. It could be a trap, right? Because we've gotten to this level and sold off here many times. Where's Coinbase? Coinbase is 63.
So far, so good. It's a better morning. Let's see if this sticks. We're up by 0.9% on the S&P, on the Nasdaq by about 1.5%. That's the price action. Here's the trading diary. Coming up, TikTok CEO testifying on Capitol Hill at the top of the hour. Secretary Yellen continuing her congressional testimony at 3 p.m. Eastern Time. Plus, President Biden heading to Canada for a meeting with the Prime Minister, Justin Trudeau. Rounding out the week with Fed speak from St. Louis Fed President Jim Bullard on Friday, along with more economic data points, including US PMIs and durable goods from New York City. That does it for me. Good luck for the rest of the trading day, and thank you for choosing Bloomberg TV. This was the Countdown to the Open. This is Bloomberg.
Next year, though, coin, Tesla 210s, another 1.5 million. That's 2 orders for one. That's $3 million on Tesla for 2 weeks out. J Trader is saying the great trades make you ask yourself, can I really afford to not be in this? And that's a great comment, man. I really enjoy that comment. Double Down is saying, Gucci, what near-term even is there to say otherwise? Not sure what you're talking about, Double Down. I think that dip buy on Apple, who's ever on that dip buy on Apple, you got your head in the right place. Somebody bought $295 Nvidia for monthlies. They're already betting this. Same thing on the Amazon, week out. Check out the Snapchat. Snapchat, that aligns with my shit. Where's the Snapchat? Let's take a look at Snapchat. Oh. Take a look at Snapchat, guys. So Snapchat is at the same place as the Pence is. So they're at that place, right? Where, again, most people are not going to buy up here because you're buying the highs, right? Now, let's say you pile in.
Bid offer, open interest.
Jan, let me.
Right, I am going to take off the fucking delta. But I'll leave it there for now. Okay.
Okay.
Alright, so we got the 395s.
Okay.
They go for that price.
Remember, who's got the runner left on Netflix? I think you're gonna get paid here. By the way, the SPX puts that I sold haven't even moved. They haven't even moved, which is making me kind of suspicious. A little bit. Pins last highs was 29.17 a month ago. Right. Got rid of all the Netflix, can't watch closely anymore this morning. Nice trader, Carlo. There's your pop on SPY. I think we're going to 397. There is $4 on Netflix. Holy shit. That was a W money trade right there. Get the fuck out of here. We just sold the rest of it. We should have held the whole thing. Oh, that was pop on home sales. What was our home sales numbers?
Great questions.
Yeah, John, we got you.
From the financial centers of the world, this is Bloomberg Markets with Alex Steele and Guy Johnson.
It is 30 minutes into the U.S. trading day, Thursday, March 23rd. Here are the top market stories we're following for you at this hour. It's showtime for TikTok. The CEO faces down Congress today. The Biden administration could still ban the app, and China pushes back. We're going to go live to that hearing. And the Jay and Janet aftermath. Regional banks really mixed after conflicting messages on deposit safety from Jay Powell and Janet Yellen. We're going to take a look at the consequences and the trade. And the next crack in the markets. Investors look to commercial real estate. It's a big risk as financial conditions tighten. We're going to talk to a big player, Joe Sith, Chairman and CEO of Thor Equities from New York. I'm Alex Steele with my co-host in London, Guy Johnson. Welcome to Bloomberg Markets. I get it. It's a relief rally today. I just wonder how strong this conviction is.
Yeah, I think it's a really tricky one to call right now. I think it depends on what's happening in the banking sector. As you say, we've got confusion in the Capitol yesterday. Jay Powell saying one thing, Janet Yellen maybe pointing us in a slightly different direction. I don't think they're in quite as conflict as maybe the headlines suggest. But yeah, I think it's down to what happens now with housing. We are getting some data. New home sales coming at 640. That's a little light, but not by much. The month-on-month number comes through at 1.1. There is this fear, Alex, that people are going to be going back towards multifamily rather than single family, and that's going to influence these numbers. But the story is definitely one of what happens in the banking sector right now and how safe is your money.
Yeah, exactly. And should all deposits be guaranteed? Simon White of Bloomberg, and I get that he's pessimistic and I make fun of him for it, but said that that's the moral hazard, right? If you protect deposits, it does nothing for liquidity and nothing for solvency. It just makes you take more risk potentially. I thought his column was super interesting.
Absolutely. The line that's coming from others is that we are going to wipe out shareholders. In the Swiss case, we're going to wipe out AT1 holders, and management is going to suffer. But Simon's point is a well-argued one. So as I say, Alex, we've got conflicting messages. Fed chair out yesterday, your money's safe. Don't worry about it. Janet Yellen, the Treasury Secretary, maybe not quite so clear on deposit safety.
depositors should assume that their deposits are safe.
They're not considered or discussed anything having to do with blanket insurance or guarantees of all deposits.
You've seen that we have the tools to protect depositors.
Deposit protection is provided by the Deposit Insurance Fund.
And we're prepared to use those tools.
That sounds like they're in conflict, but are they really? You can't expect Jay Powell to be coming out and saying, yeah, the banks aren't safe. The Treasury Secretary is speaking in front of Congress. Congress ultimately is going to be the final arbiter on whether or not we extend deposit guarantees. So our question, as I say, is your money safe? Joining us now to try and answer this question, because it's a key one for the U.S. economy, Sonali Basak, and in D.C., Katie Lime. Sonali, is our money safe?
Well, maybe not all of it, as you can see from what had happened in the last couple of weeks. So the question here is the U.S. government, to the point you're making, has shown that it could step up to help depositors out. They had left some shareholders, bondholders, potentially holding the bag here. But if you're a depositor in the United States, even though that conflicting message, it seemed, from Janet Yellen as well as Jay Powell, you have to understand that at the end of the day, the authorities did step up when things got bad enough that you needed to. I think when you look at, for example, the facilities being drawn down, when you look at the emergency lending facility put up by the Fed, as well as the tapping of the discount window here, you're seeing a lot of damage being saved so far in the regional banking community, but there are big open questions and risks under the surface, Guy, particularly as it pertains to First Republic. Until that situation is cleared up and the ultimate end game is known, there are a lot of questions about how much the government will need to step up even more.
Yeah, so Kaylee, what are your sources telling you about that? Like, we made a lot of hay about Janet Yellen and Jay Powell being very different, but in actuality, were they really?
No, largely I don't think that was the message. I mean, we have heard the same message from them as well as other officials in the administration and from regulators that the banking system is sound, it is safe, it is resilient. So their message in a chorus has been, yes, your money is safe, and we are willing to act in exceptional cases when systemic risk is posed. So I think this is more a conversation about being proactive and reactive. Perhaps proactively is the conversation around ensuring all deposits to prevent deposit flight, which is something that is very murky legally, considering, as Sonali alluded to, only Congress really has the ability and the authority to raise the FDIC insurance cap. Then there's the potential reaction. Should that deposit flight happen, authorities are saying, look, if it does, we have the tools to address it in that case. So I think that's the difference here.
Kaylee, I think you bring up a really good point about the before and the after. And how regulators and authorities should be looking at this. The other question I think a lot of people are going to be asking themselves in the United States right now is, given what we've seen over the last couple of weeks, are the authorities doing a good job in getting in front of any crises to ensure that my money is safe? Do you think we're going to see a long tail in terms of the hearings and the regulatory changes that are going to be attached to all this? Because up until now, you could argue maybe they're not, and maybe they're not doing a good job of protecting my money.
No, I think that's a very fair question, because of course we're having this ongoing conversation about what do you do with the FDIC insurance cap? Can you insure all deposits, or does it need to be raised? But we know here in Washington things may move very slowly, but this crisis in particular is moving very quickly. I mean, we're talking about social media, activated bank runs essentially happening in the span of days. That is not the way that policy tends to move here, but I would say that there is kind of a feeling that they do need to accelerate this already next week. We have the dates, Tuesday and Wednesday, of the hearings in both the Senate Banking Committee and the House Financial Services Committee, so they're looking into it, but a lot of that is going to be backward looking. How did what already happened happen? The forward look is maybe a different matter.
100%. Well, the reason why we also care about the question, is your money safe, is because it goes to the point of the credit conditions, right? Because if we wind up seeing tighter financial conditions, that's exactly what Jay Powell was talking about, is why there was less guidance on a Fed rate hike continuing, because there's going to be some financial condition tightening. So it really begs the question, if we're looking at banks, we're looking at their deposits, we're not really sure about outflows, how are we going to measure these credit conditions, Sonali? And I feel like if you're going to take on risk right now or not not? That is a true key question.
Remember, I think that Apollo's note earlier this week about the idea that credit conditions had tightened to the levels of 2008 even before this banking crisis started is a really important note. Think about all these lagged effects we're feeling across the economy in the incalculable ways to realize what that impact is in the way people deploy money. Remember, I think another problem here when you're thinking about credit conditions and the safety and soundness of the banking system, to Kaylee's point, how much of this is retroactive. Think about how much heat Chair Powell got yesterday from the handling of Silicon Valley Bank, not in the last couple of weeks, but missing the signs last year, earlier on. So how much of a clampdown does that mean? You might see here an overreaction from federal officials here because there are so many questions about how they handled it the first time around.
But there is this issue, Kaylee, of speed, and this is what Jane Fraser was bringing up yesterday, the boss over at Citi, in conversation with David Rubenstein. She was talking about the fact this happened really fast. And in a world where social media interacts with the ability to take money out of banks and move it super fast, do we not need different types of regulations to manage this? It comes back to the question, is my money safe? Things are happening very fast at the moment. Regulators, to your point, are going to move very slowly. How do we square that? How do we make regulation adaptable for this new world? And how quickly can DC make that happen?
Well, I think those are great questions, and you actually had Chairman Powell speaking to that exact point in the press conference. He said what happened with Silicon Valley Bank is something we had never seen before in terms of its velocity. So yes, given that this is this new world we're living in, it by extension indicates that supervision and regulation do need to change. There is a question of how much the Fed just does that internally, because it does have its internal investigation that we're expecting results from in about a month and change on May 1st. They're going to look at what they need to do, but then there's also a question of what Congress needs to do. On that front, I would say there probably isn't that much hope for an actual tightening in regulation, because we do have a divided Congress, and we know that on the Republican side there is a great reluctance to put back into place what was rolled back in the 2018 Act that took some of the most stringent measures around Dodd-Frank away from some of those mid-sized banks. There seems to be a reluctance to do that. So I think it's a question of what the Fed itself can do in its supervisory measures to be looking more closely at these balance sheets, perhaps, because it's very unlikely that tighter regulation is going to come from Congress, at least at this point.
Yeah, and talking about moving fast, it was a great piece, Guy. I don't know if you read it about how SVB was actually moving quickly, but the Fed window closed at 4 p.m. And it was like, sorry, guys, we can't do anything else about this. You have to wait till tomorrow morning. And that's what really sped up its crisis. It was a great piece for it. All right, guys, thanks a lot. Really appreciate it. Sonali and Kaylee, thank you very much. So coming up, we're going to get more on the question of the day. Is your money safe? And then how do you position for that? Nisha Patel, Parametric Portfolio Associates Managing Director, will be joining us next. And we will take you live to Capitol Hill, where the CEO of TikTok is giving testimony to lawmakers. We've got all those details next. This is Bloomberg.
More than 130 million people in the United States use TikTok every month, including 2/3 of American teenagers. TikTok collects and compiles vast troves of valuable personal information to create an addictive algorithm that is able to predict with uncanny accuracy which videos will keep users scrolling, even if the content is harmful, inaccurate, or feeds destructive behavior or extremist beliefs.
We still got the short puts on Netflix. I don't have any left on the Netflix anyway, so I don't really care. Check out the GME. I should have probably dumped all of it. Watch out for that one.
Probably.
I mean, I could go ahead and sell some more, but I don't want to. Apple. Somebody's talking about Apple 160s. Yep, that looks good. Tesla 199. 199. Check out the pins. Check out the pins and the snap. Look at the snap and the pins. Oh man, they're gonna make me want to like. See, the thing I don't want to do is buy the highs on this if I'm trying to swing it.
Before.
That's what I don't want to do.
Right, this setup.
If we buy next week 30s,
before
next
it would
week
always
30s
be
will go for 25 cents, and there's nobody
range
trading.
day.
There's no volume here at all. This week, nothing. Nobody's even in these things.
Right.
How the fuck is that even possible? Most volume traded on pins today is the 2,000 contracts I just bought on the April monthlies.
Okay, look.
So I'm the only one fucking with this thing. Why? Something's wrong here. I gotta chill. Alright guys, other than that, I'm pretty much done for the day. Ask me whatever you guys want to before I pull off. I got so many other things I gotta do today. If you guys got any questions, ask me them now here before I bounce. A lot of you guys have been asking for us to stream for a lot longer than the first hour of the day. I hear you, we're gonna get there. Once I get my team to stop fucking around.
The banking system is pretty sound, and we're talking about a few banks. We heard it from the Chairman Powell today. This is not something that is spread across the entire banking system. This isn't like it was last time. This is not a credit crisis. This is a situation where it's a few banks.
That was Citigroup CEO Jane Fraser speaking last night with David Rubenstein at the Economic Club of Washington. That brings us to the question of the day: is your money safe? Joining us now, Nisha Patel, Parametric Portfolio Associates Managing Director for Fixed Income SMA Portfolio. Nisha, and part of this is deposit outflow. I'm going to go put everything in a money market fund. I'm not going to keep it in a bank. I'm going to go put in a 5% money market fund and just leave it there. Are we seeing that actually happen? Is the money in the bank safe, or are you putting it somewhere else?
We're seeing a lot of clients moving it out of deposits and just overnight sweep funds into other vehicles. It's something that we've been seeing a trend, and it's no surprise given where short-term treasury yields are and treasury bill yields are. It's just even building out simple monthly ladders, right, with treasury bonds. There's this need to rebalance portfolios to get to safety, and treasuries have been a great way to do that. So we're certainly seeing that. However, I'd take 25 basis point hike recently by the Fed as a vote of confidence, right? So it goes back to the question of, is my money safe? I think the Fed has injected that vote of confidence. I think Janet Yellen coming out and saying, look, we're not going to do a blanket insurance, but behind that is really implied, look, we'll be there if it needs to be there, but why do this now if it's not necessarily needed?
Just going back to the issue of the amount of money that's in money market funds right now, what is the impact of that? Does that have a ripple effect into other areas of fixed income, other asset classes, the amount of money that has come from other sources into that space?
Yeah, I mean, in terms of fixed income, look, as we're seeing that negative correlation back between stocks and bonds, right, this only reinforces that. And I think you just see incredible inflows from money market funds into fixed income instruments, right? So that can put more pressure on yields. You can see the curve continuing to come down in terms of longer-term yields. Clients for some time have been underweight fixed income. As you have more volatility in stocks, as you have a higher maybe percentage of a hard landing now, right, still small, but a higher percentage, clients want a position for that. So whether it's investment-grade corporate bonds, again, treasuries, for higher tax bracket clients, we're seeing value in municipal bonds. Clients are okay taking duration and adding money to fixed income. So I think you see a lot of flows from just money market funds into those types of instruments.
Nisha, I hate to do this, and we're going to have to leave this conversation for the moment. Nisha Patel, Managing Director of Fixed Income SMA Portfolio at Parametric Portfolio Associates. We need to take you to the TikTok hearing. Shou Chew is now speaking. Let's take a listen.
Videos already have over 116 billion views on TikTok. And I think TikTok is inspiring a new generation to discover a passion for math and science. Now, I would also like to talk about national security concerns that you have raised, that we take very, very seriously. Let me start by addressing a few misconceptions about ByteDance, of which we are a subsidiary. ByteDance is not owned or controlled by the Chinese government. It's a private company. 60% of the company is owned by global institutional investors, 20% is owned by the founder, and 20% owned by employees around the world. ByteDance has 5 board members, 3 of them are American. Now, TikTok itself is not available in mainland China. We're headquartered in Los Angeles and in Singapore, and we have 7,000 employees in the US today. Still, we have heard important concerns about the potential for unwanted foreign access to US data and potential manipulation of the TikTok US ecosystem. Our approach has never been to dismiss or trivialize any of these concerns. We have addressed them with real action. Now that's what we've been doing for the last 2 years. Building what amounts to a firewall that seals off protected U.S. user data from unauthorized foreign access. The bottom line is this.
We're at 397.
American data stored on American soil
87.
by an American company, overseen
This
by
should
American
have
personnel.
a lot of volume, and it should have
We
no
call
volume.
this initiative Project Texas. That's where Oracle is headquartered.
Okay.
Today, U.S. TikTok data is stored by default in Oracle servers. Only vetted personnel operating in a new company called TikTok U.S. Data Security can control access to this data. Now, additionally, we have plans for this company to report to an independent American board with strong security credentials.
So
there's still some work to do. We have legacy U.S. data sitting in our servers in Virginia and in Singapore. We're deleting those, and we expect that to be completed this year. When that is done, all protected U.S. data will be under the protection of U.S. law and under the control of the U.S.-led security team. This eliminates the concern that some of you have shared with me that TikTok user data can be subject to Chinese law.
Now,
This
the other
goes further,
hand,
by the way, than what any other company in our industry have done. We will also provide unprecedented transparency and security for the source code for the TikTok app and recommendation engine. Third-party validators like Oracle and others will review and validate our source code and algorithms.
Which side has more
This will help ensure
open
the
interest?
integrity of the code
Which
that
side
powers
has
what
more
Americans
open
see
interest?
on our
97.
app.
So just call it right there.
We will further provide
So you're gonna be
access to
checking
researchers,
this one or
which
this
helps
one?
them study
Whichever
and
one you
monitor our
want.
content
Doesn't matter.
ecosystem. Now, we believe we are
Doesn't
the
matter.
only company
So you're
that
going to be
offers
checking,
this level of
we're at
transparency.
97, you're going to be checking this one, and this one.
Now, trust is about
Check
actions we
the
take.
first one.
We have to earn their trust with decisions we make for our company and our
calls.
products. The potential security, privacy,
have the
content
calls,
manipulation concerns raised about TikTok are really not unique to us.
have 98,
The same issues apply to other
you got
companies.
10,000 over here.
We believe what's needed are clear, transparent rules
And you got
that apply
10,000 over
broadly
here.
to all tech companies. Ownership is not at the core
So what
of addressing
these
these
numbers
concerns.
tell you right
Now, as I
now
conclude,
is that
there are more than 150 million Americans who love our
what
platform,
you're looking for,
and we know
the
we
first
have
thing
a
that you're looking
responsibility
for
to
is
protect them.
who's selling this.
Which is why I'm making the following commitments to
Because-
you and to all our users.
In order to sell this, you have
Number
to have
one,
conviction that
we will
it's
keep
not
safety,
going to go to that
particularly
place.
for teenagers, as a top priority for
Let me
us.
give it to you
Number
this
two,
way.
we will firewall protected U.S. data from unwanted foreign
We're
access.
at 397.
Number three, TikTok will remain a place for free expression and will not be manipulated by
This is
any
what it looks
government.
We just had
And
a big
fourth,
down there yesterday.
we will be
And we're
transparent
bouncing
and we will
right
give
now.
access to
Does
third-party
anybody, so
independent
now you want to
monitors
look at this
to
400
remain
to
accountable
see
for our commitments.
if
I'll be
anybody
grateful for
thinks
any
we're
feedback
going
that you
there.
have, and I look forward to your
tomorrow.
questions. Thank you very much.
All right.
As you know,
400.
the testimony that you're about to give is subject to Title
3600.
18, Section 1001 of the United States Code.
400.
As you state in your testimony, ByteDance is TikTok's
This
parent
has a
company.
lot of open interest.
Is it accurate to say that you are in regular
Okay.
communication with the CEO of ByteDance,
36,000.
Leon Robo?
The puts.
Chair Rogers,
That's
yes,
24,000.
I am in
Thank you.
communication with them.
Okay.
Kelly Zhang is the CEO of ByteDance China, overseeing Douyin,
puts have
the Chinese
24,000.
version of TikTok. Are you in regular communication with Kelly?
There's a lot of open. So
I'm not
there's
in
more
regular
open interest on
communication
the
with
4,000
her.
than on
The
the puts.
ByteDance editor-in-chief is Zhang.
That
Fu-
should be the
Fu
opposite.
Ping, correct?
I believe so.
That should be
And
the opposite.
Wu
Okay, because
Xu Gang
it
is
should mean that
Beijing ByteDance technology board
people are
member
buying
and also
this.
an official of the Cyberspace Administration in China.
are
Is this
buying
correct?
this because we're not going to go up there. So that money
I believe
should
so.
be safe
They are not in direct.
Thank you.
to
All
buy
of these
those puts
individuals
because
work
we're
or
likely going
affiliated
lower.
with the Chinese Communist Party are at the highest levels of leadership at ByteDance, a company where you previously served
the
as the
opposite-
chief
but
financial
you have the
officer, where you
opposite.
regularly
This
communicate
is
with their
lower
CEO.
and this is higher.
TikTok has told us that you weren't sharing data with the CCP.
So what this
But
tells you,
leaked
if
audio
there's open interest,
from
it means
within
that
TikTok has
people
proven otherwise.
think we're
TikTok
going back
told
to
us that you
400.
weren't tracking the
Okay?
geolocation of American
But
citizens.
is that
You
true?
were. TikTok told us you weren't spying on journalists.
Is that
you
true?
were.
Go
In
look
your
at the
testimony,
option.
you state that
Price is
ByteDance
going
is not
down.
beholden to the CCP. Again, each of the individuals I listed
Price
are
is going
affiliated with the Chinese Communist
down.
Party, including Zhang Fuiping,
And there's a lot of open
who is
interest.
reported to be the Communist Party secretary of ByteDance, and who has called for the party committee to, quote, take the lead across all party lines to ensure the algorithm is enforced by, quote, correct political direction. Just this morning, the Wall Street Journal reported that the CCP is opposed to a forced sale of TikTok by ByteDance, quoting a CCP spokesman as saying the Chinese government would make a decision regarding any sale of TikTok. So the CCP believes they have the final say over your company. I have zero confidence in your assertion that ByteDance and TikTok are not beholden to the CCP. Next question. Heating content is a way of promoting and moderating content. In your current or previous positions within Chinese companies, have employees engaged in heating content for users outside of China? Very quickly, yes or no?
Our heating process is approved by our local teams in the various countries.
The answer is yes. Thank you. Have any moderation tools been used to remove content on TikTok associated with the Uyghur genocide? Yes or no?
We do not remove that kind of content. TikTok is a place of freedom of expression. And Chero, just like I said, if you use our app, you can go on it and you will see a lot of users around the world expressing content on that topic and many others.
Thank you. What about the massacre in Tiananmen Square? Yes or no?
I'm sorry, I didn't hear the question.
The massacre in Tiananmen Square.
That kind of content is available on our platform. You can go and search it.
I will remind you that making false or misleading statements to Congress is a federal crime.
I understand. Again, if you go on our platform, you will find that content.
Okay, thank you. Reclaiming my time, can you say with 100% certainty that ByteDance or the CCP cannot use your company or its divisions to heed content to promote pro-CCP messages for an act of aggression against Taiwan?
We do not promote or remove content at the request of the Chinese government.
The question
The
question is, are you 100% certain that they cannot use your company to promote such messages?
It is our commitment to this committee and all our users that we will keep this free from any manipulation by any government.
If you can't say 100% certain, I take that as a no. As I previously referenced, TikTok spied on American journalists. Can you say with 100% certainty that neither ByteDance nor TikTok employees can target other Americans with similar surveillance techniques?
Chair Rogers, I first of all disagree with the characterization that is spying. It was an internal investigation.
Yes or no? Can you do surveillance of other Americans?
We will protect the U.S. user data and fire it all from all unwanted foreign access. It's a commitment that we've given to the committee.
So I guess my question is, I wanted to hear you say with 100% certainty that neither ByteDance nor TikTok employees can target other Americans with similar surveillance techniques as you did with the journalists.
Again, I don't disagree with the characterization as surveillance, and we have given our commitments, Chair Rogers, the 4 commitments. I think it's our commitment that we will not be influenced by any government on these issues.
DOJ is investigating this surveillance right now. To the American people watching today, hear this, TikTok is a weapon by the Chinese Communist Party to spy on you, manipulate what you see, and exploit for future generations. A ban is only a short-term way to address TikTok, and a data privacy bill is the only way to stop TikTok from ever happening again in the United States. I yield back. I now yield to the ranking member for 5 minutes.
Thank you, Madam Chair. Let me just start out by saying, Mr. Chu, that I don't find what you suggested with Project Texas and this firewall that's being suggested to whoever will be acceptable to me. In other words, I still believe that the Beijing Communist government will still control and have the ability to influence what you do. And so this idea, this Project Texas, is simply not acceptable. According to a recent report, TikTok is on target to make between $15 and $18 billion in revenue this year. Is that an accurate forecast?
Congressman, as a private company, we are not sharing our numbers publicly.
How much money will TikTok make by delivering personalized advertisements just to your users in the United States? Will you give me that information?
again, Congressman, respectfully, as a private company, we're not disclosing that.
Look, the impression you're giving, and I know, I can understand why you're trying to give that impression, is that, that you're just performing some kind of public service here, right? I mean, this is a benign company that's just performing a public service. Maybe that's not what you're saying, but I don't buy it, right? My concern here is primarily about the privacy issue, the fact that TikTok is making all kinds of money by gathering private information about Americans that they don't need for their business purposes, and then they sell it. And I mentioned this legislation that the chair and I have that would minimize data collection and make it much more difficult for TikTok and other companies to do that. So if you want to make some commitments today, I'll ask you to make some commitments with regard to this legislation. And, you're going to tell me, well, the bill isn't passed, and so therefore I don't have to do it. But, you say you're benign, you want to do good things for the public. So let me ask you, why not, what about a commitment that says that you won't sell the data that you collect? Would you commit to that, not selling the data you collect?
Congressman, I believe we don't sell data to any data brokers.
You don't sell to anyone?
We don't sell data to data brokers.
I didn't ask you data brokers. You sell to anyone. In other words, under our bill, you can only use the data for your own purposes, not to sell it to anyone. Would you commit to not selling your data to anyone?
Congressman, I actually am in support of some rules.
I didn't ask you whether rules. I asked you whether the company, TikTok, would commit to not selling its data to anyone and just using it for its own purposes internally.
I can get back to you on the details.
Okay, get back to me. All right. Another thing that's in our bill says that we would prohibit targeting marketing to people under the age of 17. Would you be willing to agree to prohibit targeted marketing to people, Americans under the age of 17?
Congressman, we have actually stricter rules for advertisers in terms of what they can show to our users.
So do you would you be willing to prohibit targeted marketing to those under 17? That's what's in our bill.
I understand that there's some talk and some legislation around the country.
Well, again, I wanted you to make that commitment without the legislation. Since you say you're a good company, you want to do good things, why not?
It's something we can look into and get back to you.
Okay, I appreciate that. Okay, we also have in our bill a requirement of heightened protection for sensitive data, particularly location and health data. Would you commit to not gathering or dealing with location or health data unless you get affirmative consent from the consumer? In other words, under our bill, those are categorized as sensitive, and unless the person specifically says, I want you to collect that data, you wouldn't be able to, location and health data. Would you commit to that?
Congressman, in principle, I support that, which, by the way, we do not collect precise GPS data at this point, and I do not believe we collect any health data.
All right, so would you be willing to make that commitment that from now on you won't collect location and health data without, well, you're saying at all? Is that a commitment?
This is data that's frequently collected by many other companies.
I know other companies do it. I don't think they should without affirmative consent. You said you want to be a good actor. So why not make that commitment to me today?
We're committed to be very transparent with our users about what we collect. I don't believe what we collect is more than most players in the industry.
My problem here is you're trying to give the impression that you're going to move away from Beijing and the Communist Party. You're trying to give the impression that you're a good actor. But the commitments that we would seek to achieve those goals are not being made today. They're just not being made. You're going to continue to gather data, you're going to continue to sell data, you're going to continue to do all these things and continue to be under the aegis of the Communist Party through your organization that owns you. So in any case, thank you, Madam Chair.
Gentleman yields back. Chair now recognizes the gentleman from Texas, Mr. Burgess, for 5 minutes.
I thank the chair. Thank you, Mr. Chu, for joining us today. I think we've heard you say multiple times that TikTok is not a Chinese company, that ByteDance is not a Chinese company. But according to an article in today's Wall Street Journal, quoting here, China's Commerce Ministry said Thursday that a sale or divestiture of TikTok will involve exporting technology that has to be approved by the Chinese government. Continuing to quote, the reported efforts by the Biden administration would severely undermine global investors' confidence in the U.S., said Xu Tuting, a ministry spokeswoman. Continuing to quote, if that is true, China will firmly oppose it, she said, referring to the forced sale. So despite your assertions to the contrary, China certainly thinks it is in control of TikTok and its software. Is that not correct?
Congressman, TikTok is not available in mainland China, and today we're headquartered in Los Angeles and Singapore. But I'm not saying that the founders of ByteDance are not Chinese, nor am I saying that we don't make use of Chinese employees, just like many other companies around the world. We do use their expertise on some engineering projects.
But according to their ministry spokeswoman, it would be a divestiture of exporting technology from China. So China thinks they own it, even though you do not. Madam Chair, I'd just like to ask unanimous consent to put today's Wall Street Journal
without objection, so ordered.
Into the record. Mr. Chu, I wouldn't ask you to discuss any privileged attorney-client materials, but did anyone aside from your lawyers assist you in preparation for today's hearing?
I prepared for this hearing with my team here in D.C.
Did anyone at ByteDance directly provide input, help, or instruction for your testimony today?
Congressman, this is a very high-profile hearing. My phone is full of well wishes. But I prepared for this hearing with my team here in D.C.
Are you willing to share who helped prepare you for this hearing with the committee? And you can do that.
I can follow up with you if you like.
Can you guarantee that no one at ByteDance had a role in preparing you for today's hearing?
Like I said, Congressman, this is a high-profile hearing. A lot of people around the world were sending me wishes and unsolicited advice, but I prepared for this hearing with my team here in D.C.
Are the attorneys representing TikTok also representing ByteDance?
Yes, I believe so.
What percentage of TikTok revenue does ByteDance retain? Just give me a ballpark estimate if you don't precisely know.
Congressman, like I said, as a private company, we are not prepared to disclose our financials in public today.
But can we ask you to get back to us with a ballpark? We're not asking for the precise figures, but so the committee can have some understanding of the percentage of TikTok revenue that ByteDance retains.
I understand the question. Respectfully, as a private company, we are not disclosing our financials today.
Prior to today's hearing, did anyone affiliated with the Chinese Communist Party discuss this hearing with you, or anyone else on TikTok senior management?
Congressman, since I've been CEO of this company, I've not had any discussions with Chinese government officials.
But what about the Chinese Communist Party itself? Have any of those officials discussed this with you?
Like I said, I have not had any discussion with Chinese government officials. I don't know the political affiliation of everybody I speak to, so I can't verify the statement.
Let me ask you a question in a different direction. A few weeks ago, this committee had a field hearing down in McAllen, Texas, and it was on the issue of fentanyl and illegal immigration. And one of our witnesses, Brandon Judd, a 25-year veteran Border Patrol agent, said that all social media platforms play a role in illegal immigration. That's one of the ways cartels advertise their services throughout the world and convince people to put themselves in their hands and come to the United States. The cartels all use social media platforms. Are you aware of this phenomenon?
Any content that promotes human abuse is violative of our community guidelines, which dictates what is allowed and not allowed on our platform. We proactively identify and remove them from our platform.
Well, it would be very helpful if you would share with the committee examples of how you have removed people, because what we heard at the hearing was that TikTok was one of the platforms that recruits adolescents in the United States to help with transporting people who are in the country who've been trafficked in the country, as well as contraband substances. Would you help us with that, understanding who you have removed from your platform?
Congressman, I'll be delighted to check with my team and get back to yours and be collaborative.
Thank you. I'll yield back.
Gentleman's time has expired. Chair recognizes the lady from California, Ms. Eshu, for 5 minutes.
Thank you, Madam Chairwoman. Mr. Chu, thank you for being here today. As members of Congress, our very first and top responsibility is to protect and defend. Protect and defend our Constitution and the national security of our country. So I view this entire issue, now there are many parts of it that are not part of our national security, in my view, but first and foremost for our national security. So in examining TikTok breaking away from ByteDance, I'd like to ask you some questions about that and how a severance in terms of the relationship with ByteDance, how user data, American user data, would be protected. Now, under Beijing's security laws, Article 7 compels companies to provide data. Article 10 makes the reach of the law extraterritorial. Now, this is very clear. You don't need to read all of it into the record, but those are the laws of the PRC. How does ByteDance, how does TikTok, rather, how do you convince the Congress of the United States that there can be a clean break? Why would the Chinese government sidestep their national law, including Article 7, Article 10, in terms of user data?
Congressman, thank you for the question. I'm glad you asked this. As I said in the opening statement, our plan is to move American data to be stored on American soil by the American company.
I understand that, but you're sidestepping, or I haven't read anything in terms of TikTok, how you can actually say, and you spoke in your opening statement about a firewall relative to the data. But the Chinese government has that data. How can you promise that that will move into the United States of America and be protected here?
Congressman, I have seen no evidence that the Chinese government has access to that data. They have never asked us. We have not provided.
But you know what? I find that actually preposterous.
I have looked in. I have seen no evidence of this happening. And in order to assure everybody here and all our users, our commitment is to move the data into the United States to be stored on American soil by an American company, overseen by American personnel. So the risk will be similar to any government going to an American company asking for data. If that...
Well, I'm one that doesn't believe that there is really a private sector in China. And when you look at their national law and what specifically these two articles, Article 7 and Article 10, are very clear. So I think that there is a real problem relative to our national security about the protection of the user data. I don't believe that TikTok has, you have said or done anything to convince us that information, the personal information of 150 million Americans, that the Chinese government is not going to give that up. So, can you tell me who writes the algorithms for TikTok?
Today, the algorithm that powers the U.S. user experience is running in the Oracle Cloud infrastructure. Yes, initially there were parts of the source code, especially at the infrastructure layer, that doesn't touch the user experience. Now, that's a collaborative global effort, including built by engineers in China, just like many other companies, by the way. The phone you use, the car you drive, is a global collaborative effort. Now, but today, the business sites and the main parts of the code for TikTok is written by TikTok employees. And Congresswoman, What we are offering is third-party monitoring of our source code. I am not aware of any company, American companies or otherwise, that has actually done that. Because we are saying we want to give you transparency and rely on third parties to make sure that we get all the comfort that we need about the experience.
Well, my time is up, and I yield back. Thank you. Lady yields back. Pleased to yield to the gentleman from Ohio, Mr. Latta, for 5 minutes.
Well, thank you, Madam Chair. Unlike the Chinese Communist Party, the United States believes in individual freedom, innovation, and entrepreneurship. That is, in part, why Congress enacted Section 230 of the Communications Decency Act. Our goal is to promote growth of an online ecosystem in the United States and to protect companies from being held liable for good faith efforts to moderate their platforms. Last year, a federal judge in Pennsylvania found that Section 230 protected TikTok from being held responsible for the death of a 10-year-old girl who participated in a blackout challenge, also known as the choking challenge. TikTok actively pushes video on her feed. Unfortunately, this is one of the many devastating examples of children losing their lives because of content promoted by TikTok. Section 230 was never intended to shield companies like yours from amplifying dangerous and life-threatening content to children. Do you consider this to be a good faith moderation?
Congressman, as a father myself, when I hear about the tragic deaths of people, it's heartbreaking.
Do you find that good faith moderation?
Well, Congressman, Section 230 is a very complex issue.
Yes or no?
We are very focused on safety, and all these dangerous challenges are move when we find them.
Do you believe TikTok deserves this liability protection?
I'm sorry, Congressman.
Do you believe that TikTok deserves this liability protection under Section 230?
Congressman, as you pointed out, 230 has been very important for freedom of expression on the internet. It's one of the commitments we have given to this committee and our users, and I do think it's important to preserve that. But companies should be raising the bar on safety.
Let me follow up.
Really agree.
Let me just follow up real quickly from your own testimony. When you told us and you repeated it, we'll keep safety, particularly for teenagers, a top priority for us. When you're saying you're making that following commitment, why did you have to wait till now to make that following commitment now and not having done it before when this 10-year-old lost her life?
Congressman, I'm reiterating the commitment internally in all my priorities, which is public to my employees. Safety has always been a priority.
This company is a picture-perfect example of why this committee and Congress needs to take action immediately to amend Section 230. When we recently met, I asked you if the Chinese Communist Party can currently access user data, and you did not have a clear answer. So today I want to follow up. You heard it a little bit, but I want to be absolutely sure of this answer. Are employees of ByteDance subject to Chinese law, including the 2017 National Intelligence Law, which requires any organization or citizen to support, assist, and cooperate with state intelligence work in accordance with the law?
Like many companies, including many American companies, we rely on the global workforce, including engineers in China.
Okay, but no, yes, no.
So in the past, yes. Yes, but we are building Project Texas, and we're committing the firewall of all protected data. Taking that
as a yes because, again, your Article 7, the Article 7 of the 2017 National Intelligence Law, which I just said, is it says, in addition, as we asked a little bit earlier, the 2014 Counter-Espionage Law states that when the state security organ investigates and understands the situation of espionage and collect relevant evidence, the relevant organizations and individuals, it does not say may, it says shall provide it truthfully and may not refuse. Yes or no? Do any ByteDance employees in China, including engineers, currently have access to U.S. user data?
So it's got 10,000 right now.
Today, all U.S. user data is stored by default in the Oracle Cloud infrastructure, and access to that is controlled by American personnel.
Any ByteDance employees in China, including engineers, currently have access to U.S. data?
Congressman, I would appreciate this is a complex topic. Today, all data
yes, no, that's not that complex. Yes or no, do they have access to user data?
After Project Texas is done, the answer is no. Today, there is still some data that we need
yes,
to meet.
but we've heard already from the ranking member that he hasn't, and that he doesn't really see that Project Texas is going to be useful. So I think I'm taking that as a no because, again, the question is what came to come up earlier, that on December the 22nd of last year, when ByteDance confirmed some of its Chinese employees had accessed TikTok data to monitor and track the physical location of journalists. So I took that as a yes from an earlier answer. You know, earlier this week, you posted a TikTok videos asking American users to mobilize in support of your app and oppose the potential U.S. government action to ban TikTok in the United States. Based on the established relationship between your company and the Chinese Communist Party, it's impossible for me to conclude that the video is anything different than the type of propaganda the CCP requires Chinese companies to push on its citizens. Now yield back.
Yields back. Chair recognizes the lady from Colorado, Ms. DeGette, for 5 minutes.
Thank you, Matt. Thank you very much, Madam Chair. Mr. Chu, like my colleagues, I'm concerned about the influence of China on TikTok and what that does for U.S. users. But I'm also concerned about how the content in TikTok is being distributed, particularly to young people. This is not a problem unique to TikTok, but TikTok has 150 million users in the United States. And so I think you'll agree that TikTok has a particular responsibility to monitor content to make sure that it's safe and accurate. Would that be fair to say?
Yes, I agree with that.
So, I know you said in your opening statement there's a ban or limited for kids under 13 and under 18 and so on. But I know it won't be news for you that computer savvy kids actually can bypass some of those restrictions quite frequently, and they can do it even if they have parental oversight. And so what I want to ask you is rather than putting the burden on young people and parents to accurately put in the birth date and so on when registering for TikTok, I want to ask you what TikTok can do to make sure to monitor this content. And I want to give you some examples of some of the extreme content. Mr. Latta talked about the blackout challenge and some of the dangers to young people's safety, but there's also extreme content around healthcare information. In one study, 13...
You can keep following this hearing. You've been listening to the TikTok hearing with the CEO of TikTok to the Energy Committee. Truly fascinating. It definitely feels like Congress has made up its mind in terms of how it feels with TikTok, but still the line of questioning, really interesting. If you want to keep watching, go to Live Go. You can also check out our T-Live blog as well. I want to get right to Anne Marie Hordern. She's on Capitol Hill. Anne Marie, what's going to be the net result of these hearings?
Well, so there's a lot of things going on right now. One, you have the TikTok CEO answering questions, but the issue is that this was already going to be a lose-lose game before he even entered that door. We knew the types of questions he was going to be asked, and the issue is that Congress is already working on 4 bills that would address companies like TikTok or TikTok outright to be banned. At the same time, you have this CFIUS review, which I reported last week that the U.S. government told TikTok's owners, ByteDance, the Chinese company, that they either had to divest or face a ban. So basically, you can see that there's a clear wall. Even though the TikTok CEO continues to go back to Project Texas, this is that $1.5 billion plan to isolate user data via Oracle in the United States, it is clear that lawmakers and the U.S. government don't see that is sufficient to keep user data safe for Americans. And what he has said ahead of this hearing on his own TikTok was that now it's not just 1 million Americans who use TikTok, it's 1.5 million Americans. And that is a concern for members of Congress.
Anne-Marie, is there an acceptance within the halls behind you that there will likely be a Chinese response, that U.S. companies will face something potentially symmetrical in terms of being banned from China? Is this the opening up of a chasm between the Chinese and the United States in terms of the ways these kinds of companies are treated? And you've only got to look at what happened with Google earlier this week and PDD.
I don't think it's just an opening, Guy. I think this is just another layer of that list of the acrimony we're seeing between these two governments and where the business community is trying to navigate, right? So first you have it with TikTok, and the response this morning from the Chinese Commerce Ministry is that they will not go along with a forced sale. And the spokesperson saying that this would be deemed a technology export, and then that would have to go under Chinese law and administrative law. So it might be actually quite difficult for the Chinese government to even give ByteDance allow it to have this divestiture. Potentially, maybe, and this is what one source had said to me, maybe ByteDance has a passive stake in the TikTok company. But it's a great question you asked. Already what we're hearing from the Chinese Commerce Ministry doesn't sound like they are on board with this, and potentially this just sets up more issues like this. And I think at the moment the Chinese economy needs these American companies, but maybe in the future this could become much more difficult.
Yeah, and the retaliation as well. Anne-Marie, great stuff. We're really looking forward to it. Remember, guys, you can go to T-Live. You can also go to Live Go and continue watching. Another tech story that we're watching here is Block shares, aka Square, are tumbling after Hindenburg Research said it is betting on a decline in the stock. Now, we should note that Block did not immediately respond to an email request for comment from Bloomberg News. So Bloomberg Technology co-host Caroline Hyde joins me now with more. So it's Block, but we're used to calling it Square from Jack Dorsey. What are some of the allegations here that we're parsing through?
It's also Cash App, and it's mainly Cash App that Hindenburg Research has done a couple of years really focusing on in terms of research, forensic research, they say. Cash App, they believe, were facilitating fraudsters, particularly around the stimulus, government help, the fact that they could access checks. The alleged accusation here is that Cash App was allowing multiple people to use the same bank account and to claim a load of money from the government, thousands, and therefore they're worried about the compliance, what that means for compliance, but they're also seeing shortfallings in other areas with Cash App. They're saying that they're overstating the amount of people that use Cash App. They're also taking issue with, remember that $29 billion deal that Block did to buy Afterpay, the Australian buy now, pay later company. They don't like that particular deal. They also don't like the way in which Cash App charges merchants every time you swipe to make a payment. So there's a few issues, but largely it's the compliance, it's the facilitation of fraud that really is making people sit up, listen, and see the stock therefore fall about 20%.
When will we expect to hear from Block? How do you respond? What does history tell us about how companies like this are going to respond?
It's a difficult one, isn't it? I've already sent them an email myself. I've been in touch with some of the press, press people there. We know that Bloomberg News has reached out as well. We wait, we see, but we know that the impact on shares is huge. Already some analysts have taken note. Baird in particular, Guy, have already come out and said, look, they actually think Block's share price is good value, but they are worried about any criminal activity here, what it means for investor sentiment. And investor sentiment is going to be crucial in this. You've already seen the immediate impact on the share price, and this tends to be sustained. We've seen 30 such targets by Hindenburg Research in the last few years, and when you look 6 months out after a Hindenburg Research report drops, they tend to be down more than 20%. So this is something that Block's going to have to tackle.
Yeah, and we'll wait for that. We're looking forward to your coverage on your show. Also something that's like totally under the rug right now because of all the news flow is Apple spending $1 billion a year on films to break into cinemas. We have AMC stock up 7%. At some point it was halted. You got Netflix at the super solid rally. Nasdaq 100 up almost 2.5%. What do you make of it?
Yeah, $1 billion. Martin Scorsese films. Leonardo DiCaprio is going to be in it. Paramount Pictures, therefore, perhaps facilitating this sort of movie going out into theaters before it goes on to Apple Plus. This is Apple finally realizing that if you're going to spend $1 billion on movies such as this, you want to make it some sort of cultural event. You want to be able to make this a marketing exercise to draw people to Apple Plus. Why? Because only about 20 to 40 million people subscribe to Apple Plus, whereas there's 200 million or thereabouts that subscribe to Netflix. Notably, Netflix doesn't do this, remember, Guy.
Why don't they just buy Netflix? Disney's probably maybe a step too far, but Netflix, a little cheaper.
Competition might make an issue, I think, maybe.
Well, that's possible, but you could argue that maybe it wouldn't, and the consolidation in this space is going to happen. Why doesn't Apple just get in front of it?
I would love to see what the competition authorities think to any big deal being done by any big technology company at the moment. But you raise a good point. We are all scrambling to decide how many subscriptions we all need at the moment, and we're all getting a little bit wiser, a little bit more economically under pressure. Maybe we start cord cutting in various directions. This is why Apple wants to make you come to them rather than Netflix, rather than Disney, because they got the right sorts of films and movies available.
You've got a lot to talk about on the show a little later on. We're definitely going to be tuning in. Caroline, thank you very much indeed. This is Bloomberg.
Still nothing. Every pullback is a fucking buy.
Thursday, the 23rd of March. European equities, to be honest, aren't doing very much. European currencies, well, that's a completely different matter. The second hour of Bloomberg Markets starts right now.
The countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alex Steele.
No reason to stop. First hour in the back.
Stock 600 absolutely flat. Banks are dipping. It basically is a reaction to the Yellen comments yesterday, and it's continued throughout most of the day here in Europe. That's the equity story. To be honest, the equity story isn't where the centre of attention is. The story is in what is happening with bond yields right now, which is fascinating. Look at the UK 2-year today, actually down by 17 basis points. So there's a bid in the bond market. Currencies are catching a bid. The pound is up. The Norwegian kroner is up. You've had a whole series of central banks around Europe today raising rates, including, Alex, the Bank of England, which, given yesterday's data, may not come as much of a surprise, but the hawkish commentary that went with it probably is.
Yeah, we were kind of looking at 25 and then done, right? That was what we thought last couple weeks ago. Well, here what's super interesting is equities are flying. You have the S&P up 1.6%, NASDAQ 100 up 2.5%, tech definitely leading, tech outperforming. And a big reason of that is going to be Netflix. We'll get to that in a second. Regional banks, though, they're up just 0.8%. First Republic, for example, had a nice rally. Then we've given up some of those gains. Some of its peers, it's a similar issue. So they got hit really hard yesterday after there seemed to be some difference between what Powell and Yellen were saying about insuring deposits. Whether or not that was true, that's a whole different story. And in theory, insuring deposits should be bad for bank stocks, because they're definitely going to have to pay in more for insurance. But nevertheless, you have regional banks calming down a little bit. Now, the Netflix story, which feeds into the tech story, up a whopping 9%. That's because Apple's going to spend $1 billion making movies that are going to go to the theater first before they go to Apple Plus. Guy pointed out, why don't they just buy Netflix? Is that why Netflix is rallying? I don't know. It's an interesting theory. And the 2-year yield also down 2 basis points. It was a bit higher, but we've calmed down there as well. I just wonder how much risk is going to be sustainably taken on, Guy.
Absolutely. It's going to be fascinating. I just find it quite nice that we're talking about other things other than banks. I know we're still talking about central banks, and we probably are still talking about banks, but it's nice to be talking about something else. Let's just talk about the FX story I alluded to at the top. So the Bloomberg Dollar Index is down by 0.4%. Let's take a look at what is happening around Europe. So the pound is up today by 0.4%. The Bank of England raising and sounding hawkish. The Norges Bank raising and sounding hawkish. They're back to raising is the critical thing here. The Norwegian currency is up by 1.5% against the US dollar. The Swiss franc is up by 0.4%. Basically, the question I wanted to ask today was, does the buck stop here? Has the buck stopped here? But my team wouldn't let me do that, Alex, because we used to have this producer called Highland, and he got very upset about these things. So we've come up with another one. But I think the point is well made. Maybe the buck has come crashing to a halt.
Yeah, it's amazing. He's ready to get that to be the question of the day for like every day. He's now on another show. But I think the point is, if you have the Fed maybe near the end of their tightening cycle and everyone else is not, are we back to a central divergence policy? And then how do you play that? Well, here there's a bunch of central bankers that have talked over the last couple of days. We tried to put together a string for you to kind of show you the divergence that we're seeing.
Last year, we have raised interest rates by 350 basis points. However, inflation is still high, and uncertainty around its path ahead has increased even more recently. This makes a robust strategy going forward essential.
But we came clearly to the conclusion that given the inflationary risk, given the fact that inflation could also be higher for longer, we wanted to take this decision. We do not believe that the decision has any negative impact on the economy and on financial stability. That was also a reason why we took this decision so clearly.
We've seen a quite significant depreciation of the krona, was one of the reasons why we now think it is necessary to hike more in order to get inflation back to target.
If we need to raise rates higher, we will. I think for now, though, as I've mentioned, we see the likelihood of credit tightening. We know that can have an effect on the macroeconomy, on demand, on labor market, on inflation, and we're going to be watching to see what that is.
The Fed might be done. It's a distinct possibility after what we heard yesterday, isn't it? Certainly we haven't got much further to go, it seems, and the Europeans, well, they certainly seem to be in mood to continue to raise rates. So this is an evolution of does the buck stop here? King Euro, is that where we're going now, or is it King Euro, King Pound, King Krona, King Franc? Basically, has the dollar been dethroned, I think is the question that we are asking here today. Well, let's try and kick that around. Let's try and get an answer. Justina Lee and Bloomberg M Live editor Eddie van der Vogt joining me here on set. Justina, let me start with you. Has the dollar lost its crown?
Well, I mean, that really is the big question here. I mean, if we look at kind of the reaction to the monetary policy meetings this week, I mean, now we have traders pricing in a lower Fed funds rate by the end of this year, but still a higher rate in the Eurozone. And I think what this really reflects is, I mean, we've had banking wobbles on both sides of the Atlantic this month, but there have been like two very different narratives emerging. I mean, for now, Credit Suisse, gobbled up by UBS, everything seems kind of fine there. But I think a lot of people are still pretty worried about the problem problems at regional banks in the U.S. And what that reflects is that credit conditions might be tightening kind of on the banking levels because a lot of lenders are now worried about risk to their balance sheet.
Right. So then that means, Eddie, is it more central bank divergence, or is it U.S. versus European bank divergence, sort of where the risk is?
Yeah, look, I think this is the big theme is that the Fed came back sounding a lot more dovish, and other central banks are, still sound very hawkish. But it's one thing for the market to fight the Fed. I think it's quite a different thing for other central banks to continue to fight the Fed, right? I think if the Fed comes back with a more dovish policy, I think you're very quickly going to see very quick inflows into their currencies. Now, that's going to bring down some of the inflation pressure, but it might not be something that they necessarily wanting to do either. And I think therefore that the Fed still exports its monetary policy across the globe. And I think while this is still the messaging we're getting from the other central banks right now, I don't know that that's going to be the case 6 months from now. And I think at the moment the market is looking for a new haven, because the dollar has been that ultimate haven because it offered the rates and it offered stability. And I don't know where you take that money right now.
Okay, so let's talk about where we go with the euro potentially here. I've heard calls definitely north of 110, 114, so maybe that's the short-term haven. And I also want to question this whole idea that the dollar, the smile issue as well, the dollar smile. You run to the dollar in times of pain because you get a dollar shortage, you get a squeeze on the amount of dollars that are available in the system. The Fed's fixed that, so that side of the smile maybe doesn't work anymore. So does this mean that actually it's a level playing field, more of a level playing field, and as a result of which we do need to focus more on divergence in terms of rates, and that does take us to the euro?
Yeah, the dollar has been the main input into markets, right, over the past year. The dollar has been the contrary trade to anything that is risky, right? We've seen the correlations across the market increase with the dollar. That is starting to fade now, because I think yesterday what we saw, the most significant moment for me, was when the stock market started to reassess this and say, well, hang on a second, Powell is not only sounding dovish, he is sounding bearish, right? I think at that point the equity market started coming back, but the dollar was still down on the day, so the dollar didn't act as a haven, because if you're going to see lower rates in the US, then that makes sense. So where is that haven trade today?
Where is it? Is it yen? Justina, is that what we're going to see? Is it the yen?
I mean, that is one thing that could help. One kind of boring thing about markets is that there's always a bit of mean reversion going on. And we've seen such a strong bullish trend for the dollar over the past few years that in a way you kind of have to expect that to reverse a little bit. I mean, that's kind of very apparent if you just look at, market positioning, for example. I mean, the long positioning on the euro is still pretty weak. And so if you kind of combine that with like the diverging expectations, for central banks across the world right now, I mean, I think there is a case for further dollar weakness from here.
Somebody just dropped something. Okay, further dollar weakness. Okay, yeah, which is the first on this show. How quickly does it happen? Is this going to be a grind, or is this going to be something that happens like over the next month or so? The market completely reassesses, money gets piled into the euro, gets piled into the yen, and we have a fast move. Or is this something that's just going to happen kind of more slowly, and we're going to have to work our way through the story for the next 6 months?
I think it really depends on where U.S. economic data go from here, because I think one really interesting thing is there was a really dovish takeaway and bearish takeaway, as Eddie said, I mean, from yesterday's Fed meeting. But at the same time, if you look at inflation data so far this year, I mean, that's still pretty hot. I mean, if you look at U.S. economic surprise index, I mean, it's not like it's decisively worsened. And so I think we really kind of have to see how far this reassessment of the Fed funds path goes, kind of depending on where U.S. economic data go. And I think one really interesting data point is also kind of the Fed's survey on bank lending standards and also their deposits, because if you see a turn there, that could kind of point to much tighter lending conditions, for small businesses, for small caps and the like.
Yeah, and also really interesting in terms of that it was already tightening. And Eddie didn't get to make his gold pitch. That was next. I know it was coming. Eddie, thanks a lot. Indy Vandervalt and Justina Lee, thank you both. He's laughing because it's true. All right, coming up, the BOE raising by 25 basis points, taking the benchmark rate to its highest since 2008. Potentially was seen as a little hawkish. We're going to break that down, though, with former member of the BOE Monetary Policy Committee, Andrew Sentence. He joins us next. This is Bloomberg.
No, I don't think it's a repeat of 2008 at all. Yeah, we've obviously increased the regulation of the banking system since then. We learned a lot of lessons in the financial crisis.
That was, of course, the Governor of the Bank of England, Andrew Bailey, speaking a little earlier this after the Bank of England raised rates by 25 basis points. Now, what is interesting is that the front end of the gilt curve, the 2-year, is down by 20 basis points today, along with the whole range of other 2 years. But nevertheless, we are down today. This, as the Bank of England in some ways hinted that potentially we could see more hikes to come. Remember as well that this decision today comes on the back of some very high, relative to expectations, inflation data that we saw earlier this week. To break it all down for us, we turn to Bloomberg's Lizzie Burden. Lizzie, nice to see you. The expectation earlier this week was that we would see a hold potentially today. It was a coin toss. Then we got the inflation data and we moved to 25 basis points. We got 25 basis points. But is that it?
Well, there are economists who certainly think it should be. I bet Andrew Sentence will tell you it shouldn't be. This is the smallest rise in 9 months, and so it looks like we're near the end of the tightening cycle. In the guidance, it was very much the same wording as before. They said that if there is evidence of persistent price pressures, they're prepared to hike again. I think that's what you're referring to. I think that you can read that 2 ways. You could read that as them saying it really has to be persistent for us to do some more. You could look at the vote split and take it dovishly. Catherine Mann, even the big hawk, has reduced to 25 basis points. You could read it the other way and see it as them saying we've had this big inflation surprise yesterday, we're still in double digits, we've still got more room to do more if necessary. And you could look at the vote split and take it that you didn't have John Cunliffe dissenting. It was just Sylvana Tenreiro and Swati Dhingra. And so you could see that